Ladies and gentlemen, good day and welcome to the Apex Frozen Foods Limited Q3 and 9 months FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shreyas Saman from Stellar IR Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and thank you for joining us today. We have with us the senior management team of Apex Frozen Foods Limited, Mr. Chaudhary Gharuturi, Managing Director and Chief Financial Officer, and Mr. Durga Prasad, Senior Manager, Accounts, who will represent Apex Frozen Foods Limited on the call. The management will be sharing the key operating and financial highlights for the quarter and 9 months ended 31st December 2025, followed by a question and answer session. Please note, this call may contain some of the forward-looking statements which are completely based upon the company's opinions, expectations as of today. These statements are not a guarantee of the company's future performance and involve unforeseen risks and uncertainties. The company also undertakes no obligation to update any forward-looking statements to reflect developments that occur after a statement is made. I now hand over the conference to Mr. Chaudhary Gharuturi. Thank you, and over to you, sir.
Thank you, Siraj. Good morning, everyone, and thank you for joining us on this investor call for Q3 FY26. We have uploaded the investor presentation on the website of the stock exchanges, and we do hope that you had a chance to go through it. We would like to reiterate that diversification remains a key focus for us. Our non-US export business has grown from around 37% in 9 months of FY24 to nearly 51% in 9 months of FY26, reflecting our continued efforts to expand across geographies and reduce dependence on any one single region. At the same time, the US remains an important market for both India and our company. While tariffs were increased to 50% in August 2025, Indian shrimp export tariffs have now been reduced to 25% effective 7th February 2026. This development is expected to support an improvement in the volumes going forward. Another key development is the EU opportunity, the proposed India-EU FTA, indicating tariff reductions in a structurally positive development. It's a structurally positive development for the industry as well as the company in specific. While the benefits will accrue gradually, it strengthens the medium to long-term growth outlook. Now, coming to the financial performance in Q3 FY26, the net revenue for the quarter grew 15% year-on-year to rupees 264 crores, primarily driven by higher shrimp sales to the European Union and improved average realizations. The improvement in realizations was supported by firm global shrimp prices, a favorable currency exchange rate, and also the impact of US tariffs. Sales volumes declined by 5% year-on-year to 2,754 metric tons in Q3 FY26 compared to 2,903 metric tons in Q3 last year. Sales to the US declined by 12% year-on-year. However, this was partly offset by a strong 22% year-on-year growth in sales to the European Union. Coming to the profitability in Q3 FY26, the lower raw material prices at rupees 327 per kilo in Q3 FY26 versus rupees 374 per kilo in Q3 of last year, along with other cost and control measures, aided the growth in profitability overall. EBITDA increased by 147% year-on-year to rupees 17 crores, and the EBITDA margin improved by 344 bits year-on-year to 6.5% in Q3 of FY26. While the previous quarter benefited from low farm gate prices year-on-year, they remain flat when compared sequentially and witnessing a rising trend in the current quarter. The profit after tax in Q3 FY26 increased to rupees 10 crores from approximately rupees 50 lakhs in Q3 of FY25. Now, coming to 9 months FY26, typically a softer quarter, like I just mentioned. With regard to the 9 months FY26, the net revenue stood at rupees 761 crores, up from 23% year on year. Sales volume increased by 2% year on year to 8,373 metric tons. Sales to the European market continued their strong momentum, registering a growth of 20% year on year, whereas sales to the US declined marginally by 1%. EBITDA grew 143% year on year to rupees 53 crores, with EBITDA margin of 6.9%, a growth of 336 bps year on year. The profit after tax stood at rupees 31 crores versus rupees 2 crores in 9 months of FY25. Looking ahead, as we enter Q4 FY26, typically a softer quarter, like I just mentioned, we are witnessing an uptick in the farm gate or raw material prices. Further, alongside recent US tariff updates, realizations may realign in the near term. However, we believe that both the US and the EU trade developments are structurally positive and will support a stronger and more sustainable demand for the Indian shrimp industry in general. In conclusion, despite the headwinds over the past few quarters and years, we have remained focused on strengthening our fundamentals, reinforcing the balance sheet, reducing debt, maintaining disciplined cost control, and diversifying our revenue base to enhance resilience. We'll continue to position ourselves to benefit from improving market conditions as they unfold. We remain committed to driving sustainable business development and long-term growth. With that, we can now open the floor for question and answer session. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Deepak Ajmera with IGE India. Please go ahead.
Hello.
Mr. Deepak, your line has been unmuted.
Hello. Am I audible?
Yes, sir. Please
Yes,
go ahead.
please.
So, thank you for the opportunity. My question on side of the revenue, that considering the Europe FTA and now the tariff has been reduced from the USA, what kind of a revenue are we expecting in 2 years, and how the ramp up of our facility will be seen from here, and on the part of the margin, what margins can we see in near futures?
So, with regard to revenue, specifically, of course, we need to first acknowledge that the recent trade agreements and also the both on the EU as well as the US relaxation in tariffs, definitely it will be boosting the volumes, which will enhance the company's utilization also of its capacities, which is and that obviously with increased volumes and with a stable pricing, we definitely expect higher revenues compared to earlier for the past 2 years. So overall, we do expect a higher growth in the revenue with regard to going into the future, especially with these plus points which are there in the market because of the relaxation of the duties which are there both in the EU and the tariffs in the US. I think that would be, with regard to, because of the volume enhancement, obviously that will be enhancing the revenue also over the next 2 years. So specifically, it should be approximately around 1,200 plus crores over the next 2 years, and of course, depends as how the utilization happens. But we are very confident with regard to utilization and growing our volumes. And obviously, as the volumes grow, the revenue also would be picking up. Margins, we expect a stable pricing in the global export markets. We expect a stable pricing. However, depending on our raw material farm gate prices in India, the margins would be, will be placed. But however, at the EBITDA level, we are pretty much confident that with these changes in the market, at the EBITDA level, the present level would be sustainable going forward. So going into the future, that is our idea as of now.
Oh, okay. Thank you for that.
Thank you.
Thank you. The next question comes from the line of Nitin with Incred Research. Please go ahead.
Hello, sir. Two questions. Firstly, I want to understand, when you say EU and the presentation says EU, do you include UK market in that, or do you exclude UK from that?
UK is not included in the EU anymore.
In your presentation?
No, yeah. It's only the EU bloc.
Understood. So that would be part of others if it
has others.
Okay. So now that being clarified, given that both these markets were won previously when there was a lot of blockage for India to export to the whole bloc, which included UK, and now at least there is a bifurcation, both are working with their own regulations. Do you see anything happening in a speedier manner in any one of them, specifically in UK, because lesser countries, lesser regulation hurdles?
Well, see, there is no relaxation with regard to regulations as such. Even though these free trade agreements are being worked out and they are being finalized, or they are finalized, regulations will continue. However, we will be placed on a level playing field with when compared to our competition, other Asian or South American competition, who do not have any tariffs or any duties. So obviously, currently, Indian shrimp are levied 4.3% of tariff, around 4.3% of duties for import in both into EU as well as UK. And so obviously, those will be, we are expecting them to be removed. First, it will happen in the UK because, as you are all aware, that the UK FTA was signed much more in advance compared to the EU, which was done recently, last month. And the EU would anyway take time for a few months, maybe hopefully in FY27, we should be able to see the effect of that. The UK, of course, as I stated, it will be much earlier. But the regulatory part is not really going to change. But again, certain non-tariff barriers to get to the right point may be brought down. For example, with regard to 50% mandatory testing of Indian shrimp consignments into the UK should most likely be relaxed much earlier, to answer your question.
Yes.
And the EU as well would be most likely following suit. But we haven't yet received clarity on that. But definitely, with regard to these sort of non-tariff barriers, yes, there could be a relaxation, and that will definitely, we mentioned earlier, we will be placed on a level playing field compared to at the same level as the other competitive nations with whom we are competing with. So yeah, that is in one way, since we would be on a level playing field, that is definitely an advantage to our industry as well as the company. We could focus on growing more volume, which we have been losing to others because of these non-tariff barriers also, apart from tariff barriers.
Understood, sir. So second question, given that you are a large hatchery operator across the coast of Andhra Pradesh, how has been the demand? How has been workings in January? Were the hatcheries very busy? Because that would kind of give a lead indication as what the farmers are thinking. Because that would be in a way, because the first season, to anticipate the first season from the farmer side would be you having a very busy January, February on the hatchery side.
Oh, yes. With regard to the hatchery operations, we are operating, of course, in the south currently. Our major hatchery, which is there, we are operating. There was definitely a lot of conservative approach until the end of 2025 by the farmers because of the various disease-related issues and overall market, mood being dampened because of these tariffs from USA, especially. But however, now the temperatures also have improved. This is usually stockings happen in January. But this year it is a little bit kind of got late because of very cold temperatures in the almost till the end of January. But that temperature is also improving. Along with it, the good news that some of these tariff barriers are being removed definitely has created a positive momentum among the farmers also. So currently, yes, the stockings are going on, and definitely, like you rightly mentioned, the hatchery operations are going in a very in a good way. That is an encouraging point when it comes to finally it'll come to when it comes to the supply side. Like you are stating, it's a positive sign for the supply going into the future. Let us say in another 2 to 3 months, when the crop will be harvesting sometime around March, April onwards. So we are looking at a positive impact this time because of these issues which were prevailing last year, especially the US tariffs, those being squared off and removed. So that definitely that is also creating a positive momentum among the farmers. Yes.
But you mentioned more operations happening on the southern side of Andhra, where of course you have one hatchery. You had two close to Orissa on the northern side of Andhra. Those two are not operational, or are they operational?
We are not operating them. Of course, the southern side one is the major hatchery. We have 2 units there actually.
Okay.
So we are operating them in a more of in an efficient manner. Of course, we are also shipping. We are also shipping from there to other parts of the country and not restricting to Andhra. So more on an operational point of view, since we have 2 large units there, we are operating up from the south, in the south of Andhra.
Understood, sir. Thank you.
Thank you.
Thank you. The next question comes from the line of Unni with Geojit Investments Limited. Please go ahead.
Hello. Am I audible?
Oh, yes.
Yes,
please go ahead.
Yeah. First of all, thanks for the opportunity. And my question is regarding the realization in sales in terms of dollar and INR. And in that, how much of the tariff has been passed on to the customers?
With regard to the realization in rupees, it was for the quarter, it is 914 rupees. However, we also need to acknowledge the fact that this is the average realization. However, we need to acknowledge the fact that this also comprises of the tariffs payable to the US government. That's why it is high. But on an average 9 months, it was 864 rupees as far as realized per kilo, compared to 711 rupees of last year, 9 month FY25. So, but this is inclusive of the tariffs. And with regard to tariffs from the US, charged by the US, most of it, of course, most of it has been taken care by the customers because these were brought in by the US government. So this is more of a policy from that government, and they have been taken care by the customers. But that did create a dent in their volume plans from us. That's why our volumes to the US also have dropped until the last quarter. So that we expect again to be stabilizing. So yes, 914 rupees, sir.
Okay. One more question. In case of other expense, how much is the tariff and how much is the percentage amount?
See, the tariffs was 50% of the FOB value. So that translated to Prasad.
46 crores.
46. That was 46 crores with regard to the tariff component alone.
Okay. This quarter?
Yeah, only this. Yeah, so you want the 9 months? 9 months.
Only this quarter. Only this quarter.
Only this quarter. Only this quarter.
Yeah.
46 crores. 46 crores.
Yeah.
Okay. Sorry?
It was 46 crores
Okay.
for Q3.
Okay. One more question. So, in this quarter, what is the average farm gate price and what is the current outlook of the same?
No, average purchase price for the company was 327 rupees, which was, I think, stated in the opening remarks. It was 327 rupees for the company based on the sizes which it has purchased during the quarter, Q3. Yeah. And sorry, what was your other question?
Like the current situation of the farm gate, is there any increase?
There has been an increase, of course. I think, which was also stated in our opening remarks. The farm gate prices have increased. They have been increasing. Even in fact, during Q3 itself, they have marginally been increasing, and currently they are a little higher. They have increased by almost 30-40 rupees, roughly per kilo. But again, this is more driven by the demand-supply scenario presently. It's the usual. Every year it will be around this time. It will be like that, around Jan, February. That's what. Yeah.
Okay. One more last question. Like after the EU FTA, is there any new orders coming for the ready-to-eat products?
We have been getting the ready-to-eat orders even before the EU FTA, and we believe we will be continuing to grow them going forward with the FTA in place.
So, is there any expectation in the volumes in future?
Yeah, yes, correct. That's what we have stated. That's what we just said. We already have ready-to-eat orders even from the EU, but now that is growing in a slow manner. But now with the FTA, when the FTA takes effect and we get the reduced rates applicable from EU, we are confident that our customers are going to place more orders with regard to the ready-to-eat from the EU customers.
So, is there any volume guidance that you can provide for the future FY27?
At this time, let us wait. We will provide you, of course, as we do more ready-to-eat for the EU market, we will be informing you. But like we also stated to one of the earlier participants, the effectiveness of the EU trade agreement, FTA, hasn't yet been done. It will take its time, most likely sometime in the FY27. We don't know which quarter of FY27, but we are very confident that once that is done, we will be having an uptick in the orders with regard to ready-to-eat also. So, but for now, we are focused on increasing the ready-to-eat products, irrelevant and irrespective of the FTA, since we have got the approval for the ready-to-eat in the beginning of this financial year. During the end of Q1. So we are using that opportunity, and we are focusing on growing the ready-to-eat volume. So we'll provide you better idea, hopefully by the end of the fiscal year, as we grow our orders.
Okay. Thank you, sir. Thank you so much.
Thank you. The next question comes from the line of Harsh Shah with Seven Rivers Holding. Please go ahead.
Yes. Good afternoon, sir. So my question was that we operated, of course, quite low capacity at almost 32-33%. Now with tariff-related uncertainties reduced significantly, and we are obviously guiding much better growth going ahead. So how should we look at margins? I mean, I'm not holding on to any number, but say if we reach to decent capacity utilization, say something like 65-70%, then what kind of, it may happen 2-3 years down the line, then, but what kind of margins are we looking at? I mean, how is the business designed? What kind of margins can it achieve at optimal capacity utilization, assuming that the current raw material and shrimp prices prevail?
Well, we have stated earlier also that we would be maintaining the present sustainable EBITDA levels. We'll be able to sustain the present EBITDA levels, which is 7% and odd. And of course, as volumes pick up going into next year and the year after, we should look at higher margin levels also, as we would definitely have the advantage of the scale of operation and also the costs being rationalized overall. So yeah, that in that regard, as stated, it will be between 7-10% currently, and as we grow more of our ready-to-eat, we should look at 10% plus also. But currently, we would be able to sustain these levels and not looking anything lower or looking back of what happened in the past earlier 2 years.
Okay. And the US had reduced tariff from 50 to 18%. So is there a specific different tariff for shrimps and aqua products at 25%?
No. See, the US has reduced from 50 to 25. They removed the penal tariff of 25%.
No,
they have removed the penal rate of 25% for the Russian oil component, and as far as reducing from 25% to 18%, it hasn't yet taken effect, which is what we stated as of February 7th, 2026. It has reduced, the 25% has been reduced, thereby the net tariff impact on the company or the industry is 25%. That's what we stated. Once they would affect the reduced rate of 18%, we would obviously, that will take effect, and we will make the changes accordingly. We will be paying lesser. But apart from that, you all know that already the anti-dumping duty and countervailing duty are there separately. That is always there. So that's been there already, without the tariffs. So, but currently we are paying tariff of 25%. That's what we can say as of now.
Understood. And sir, how is the supply from Ecuador, Vietnam, and with 25% tariff on us now? How do we compete with them in terms of prices?
Well, the supply from Ecuador is definitely, of course, they are the number one producing nation in the world, obviously, and they have been very strong, and they are also, of course, that is continuing, even making their presence felt in the US market also. That will be there. We don't expect it to be getting any slow, but we are not sure at this point whether they will ramp up any further. As we understand, there have been issues with regard to them finding market space for their production beyond certain point. As far as Vietnam Vietnam is concerned, their production has been stable, but we haven't heard any major uptick in their supply side. So we need to watch how it will be in 2026 scenario. Currently, as you know, everybody will be going for stocking in the Asian markets. Everybody will be going for stocking after coming out of the winter climate. So we should see how it will be in the current year. But Ecuador is, it's maintaining its supply of 1.4 to 1.5 million metric tons, I think, roughly.
Okay. And yeah, in terms of pricing, I mean, how do we compare with Vietnam and Ecuador on FOB basis?
Obviously, FOB basis, they would be having with regard to Ecuador, their FOB pricing, of course, is on a higher side. They could get some advantage in the past few months, last 6 months, we can say, for the almost 5 to 6 months during the time we paid that 25% additional. They were definitely getting some advantage. But that, whether it will continue going forward or not, we are not sure. Now, as far as Vietnam is concerned, they have some other issues which we don't have a final confirmation that they are likely to be getting a higher anti-dumping duty rate, which we do not have the information yet as of now.
Okay. And so it's been a week. I mean, 7th of February is what you have mentioned in the PPT, that tariff has come down from 50 to 25%. I know it's still early days, but it's been like 8 to 10 days. But have you seen any significant increase in order inquiries from US market specifically?
Yes.
Okay.
We have.
Okay,
yes.
that's quite good. Great. Thank you so much.
Thank you.
The next question comes from the line of Siddharth with iThought PMS. Please go ahead.
My question is like on a 9-month basis, the revenue is up by almost let's say 20%, right? And 23%, right? But out of this increase, the volume is just up 2%. So how much of this is sheerly driven by the tariff component, tariff and like forex component?
The US, 9 months, the US sale looks such a thing. I think you already. One minute. See, on the tariff, for the 9 months, if we see almost we have the US has been around 49%. So, of course, whether it is 10% extra tariff or 25% tariff, or subsequently it was 50% now, which is again coming down. Roughly 49% of the sales was meant for US, which is also stated in our presentation. Now, with regard to the exchange rate, as far as the exchange rate is concerned, average difference between the exchange rate of
390 crores, sir, 9 months. Yes.
390 crores. Sir.
Yes, sir.
No, that is 390 crores, but because of tariffs that has grown in regard to the realization of US sales. But then again, at the same time, even the pricing were also remaining stable in general between Q1 and Q2. In the 9 months period, Q1 and Q2, the unit value at FOB level also was higher, especially. So mainly only the US sales was affected because of the tariffs, but the other markets didn't get affected because of the tariffs component. It is the overall market pricing itself remained stable. And apart from that, the exchange rate, foreign exchange, ఒకసారి చెప్పండి.
Mr. Siddharth, does that answer your question?
3 crores?
60 lakhs.
No, 9 months low. Just
11 crores, 54 lakhs.
in the 9 months, there was 11 crore increase, mainly because on the account of foreign exchange difference.
Yes.
Okay.
Hello? Yeah.
Yeah,
That was on the 9 months. It is 11 crores only on the exchange, with regard to the exchange front. Because the depreciating rupee.
Okay. So another related to this, the other expenses for 9 months, right? It is up by almost 75%. Is that because of the tariffs?
Yes.
Majorly?
Yes. In the 9 months, the tariff component alone, whether it is 10%, 25% or 50%, all put together, only the tariff component,
86 crores, sir, 42%.
Yeah,
total.
So 86 crores was the total tariff component in the 9 months. Whatever rate it is,
Okay.
10%, part of the sales, 25%, some sales, and also 50%.
So at the same time, for 9 months of last year, that 86 crores will be almost zero, right?
Yeah, it was not there, right? Last year, 9 months, that was not there.
Okay, sir. So one more question I have is now that the tariff is reduced, do you what do you think will be the realization going forward in the US?
Well, the realization, of course, in the case of US, it will get corrected because of the same way. At the same time, the tariff expenditure also would not be there. So that by now it is very. We should understand here that whatever increase in the case of realization was there, it was also offset with regard to the tariff payable in the expenditure side, like you rightly asked. In the other expenses component, even tariff was there. So that now I think from this quarter, with the tariffs being at 25%, obviously the realization for the US sales to that extent, 25% on FOB, it will be getting reduced compared to earlier period, earlier 9 months. Earlier 3, 4. I think it was around 4 or 5 months between August to December, August to January, almost 6 months. Almost 6 months. It was the 50% effective rate was there.
Okay, so what would be the price difference between India and Ecuador for your product categories in the US right now with that 25% tariff?
See, the customers, with regard to currently the Ecuador and Indian pricing both are would be obviously the customers are willing to pay and at least buy from India in the reduced tariff regime, because earlier it was 15% and 50%. But yes, Ecuador pricing was much higher, which we stated earlier also. They were able to get some advantage, they were able to get some good advantage because of the tariffs on India until recently. They were able to get higher pricing for the demand which was there, which could not be taken up from India because of these high tariffs. Now the tariffs being reduced from 50 to 25%, definitely there is certain with the positivity among the customers also would want to go back to India and place the orders. So currently, yes, Ecuador will likely be trying to charge higher, but at the same time, India which is a very consistent and reliable with regard to deliveries. The customers are looking towards buying from India in a looking back at India rather than having to deal with any lesser dependable sources, whichever they are, any part of the world, not specific to Ecuador. Yeah.
Fantastic. Thank you and all the best.
Thank you.
Thank you. The next question comes from the line of Sukrut D. Patil with Eyesight Fintrade Private Limited. Please go ahead.
Good afternoon to the team. I have two questions. My first question is, beyond the guidance which you have given, just want to understand your view on the growth outlook. How will Apex Foods manage risk and uncertainty in its core business, particularly revolving around global shrimp demand, export market volatility, and raw materials cost? What strategic choices will help the company stay strong, even if there are some external pressures on it? Thank you. That's my first question. I'll ask my second question after this.
With regard to export markets, obviously diversification is the key, which we have been doing, and we will continue to put in our efforts so that we are insulated from any one individual market effect like we had in the beginning of this, since we have had it since the beginning of this year because of this tariffs and other. That's one of the reasons why we have been pushing more volume to other markets than ever before. Obviously, when we have our stakes placed in different markets, obviously we would be insulating ourselves from any major hits or any major issues like this. With regard to the raw material, as stated, definitely in a stable shrimp market environment now. For example, recently with the guidance being given by the nutritionists, even by the US FDA example, specifically with regard to seafood and shrimp, there is always we expect better demand to be growing overall because of the average consumption, per capita consumption also growing over the next, into the future because of these guidances being given against rather promoting more white meat like seafood. So that obviously will have its relative impact at the sourcing side with regard to production at the farm level, because steady demand also enables for a stable production at the farm level. So that way, I think that company will, by diversifying itself to different markets, will insulate itself from any one specific issue. That's one of that's we have proven by growing our volume into other markets also, or this year especially. So I think that answers with regard to the company, as well as on the supply side, as we stated just now. The demand being stable and it also picking up by increase in consumption overall in different markets. That will also create a positive environment for a stable production at the farming level. And of course, for us, we will continue to grow our network and relationships with our farmers even more by supporting them at the primary production area, whether it is the seed from our hatcheries or in other ways. That will enable us to have a stable supply chain also for our company. I think we answered.
Thank you. Thank you, Vic. My second question to Mr. Prasad is, beyond the margin commentary, how will Apex manage financial risk and uncertainty in areas like receivables, working capital, and forex? What set of rules will ensure earnings quality stay even in certain volatile conditions? I want to understand your point of view and plan of action on this. Thank you.
The work with regard to receivables, actually, we don't have any issues as such. We, of course, have been more prompt in ensuring that our receivables are received in a timely manner, both within the country as well as from the customers outside. The current, if you see both our inventory days as well as our debtor days are also maintaining low. Overall, of course, our total working capital days is currently at 108 as of September. But of course, that is even coming down even further because both our debtor days as well as our inventory days are also coming down. And with regard to forex risk, of course, we do cover our risks by way of forward contracts, which are supporting our realizations to the extent required. So, but in a depreciating rupee environment, definitely the market is also very supportive for our realizations, as stated earlier. So that way, we are able to manage these risks in an efficient manner. Prasad, working capital, the debtor cycle looks at 9.5 on December.
Thank you and best wishes.
Yeah. Okay. Thank you.
Thank you. The next question comes from the line of Yogansh with Mittal Analytics. Please go ahead.
Hi. Thanks for the opportunity, sir. Most of the questions have been answered. Just one question I had. So last con call you had mentioned about our efforts in developing newer markets like Russia and Australia. If you could just broadly talk about our efforts over there and how those are yielding any benefits, or what is the kind of volume that you're expecting from a market like Australia and Russia and any other key markets that you're seeing coming up for us?
We are continuing to pursue those, and I think by the end of this financial year, we would be able to start our sales there, if not, or at least early April. We are continuing our discussions in that regard. There are certain regulatory restrictions with regard to Australia, which we are discussing with our customers, and we are working in mitigating them by ensuring that we are meeting those standards, their expectations at the at the border with regard to their health authorities and with their testing. So we are confident that both those two markets which you have specifically mentioned, we will be able to start volume even in a smaller manner, starting from most likely, if not by Q4, by Q1. That is next fiscal FY27 Q1 onwards, we should be able to start our sales in a slow manner. But because this is the first time market, also the customers also have to test the product. We see a huge, good potential, to be precise, in both those markets. We see a good potential, and definitely that will be an added boost for the company in FY27. Especially with these two markets. Apart from, there are a few more markets which we don't want to state at this time, but we are confident that this will help us going into the future, especially next year, in the next quarter onwards.
Right, sir. So one more question. Sorry if it has been already answered. I got dropped in between, so I might have missed it. Any numbers that you can share on the capacity utilization scale up that you are expecting for FY27?
Well, we are current. Of course, we are like earlier somebody has stated. It's current this year. For the full year, it is around 33-35%, but we expect to push it up to by another 10-15% and try to take it up to at least 50% by FY27. So we will see how that goes. But currently, we are planning for that as of now, as far as the utilization is concerned, capacity utilization is concerned.
Got it. And so still this major scale up would be from our normal capacity and the ready to eat and ready to cook, which is for the European market, that will follow up in the later half of the FY27, right?
No, it is part of that. When we mentioned, it is part of that.
Fair enough, sir. That's it from my side, sir. Thank you and all the very best to you and your team.
Thank you. We have a follow-up question. It's from the line of Siddharth with iThought PMS. Please go ahead.
Hi, sir. So I just had one question. Like for this quarter and for 9 months, what would be the capacity utilization of the ready to eat in comparison to the last year?
Last year, okay. As far as the current quarter's ready to eat sales was there, as far as sales is concerned, there has been a drop by 1% because of course, the US sales not coming into play and the Europe still picking up. That was at around 7%. Last year's Q3 FY25, we did around 8%. And on a full, but however, of course, during the first 2 months, we did some good quantity, first 2 quarters. So on a 9-month basis, last year it was 10% for 9 months, and this year it was 11%. It increased marginally by 1%, as far on ready to eat, especially.
What would be the utilization be?
Utilization would that is what on the ready to eat, especially we have, that's on the total sales, sorry. With regard to the utilization, that would be currently around, 1 minute, please. It's around, that is around, currently, yeah, sorry, that was, currently it is around 11%. Currently it was around 11% of ready to eat, and there is a good headroom for us to grow a lot on that. As only on the ready to eat capacity, what we have utilized as of this year it's only around 11%.
So what was the same last 9 months?
10%.
Last year's 9.
10%. It was lower last year.
Okay. Thank you.
Yeah.
Thank you. The next question comes from the line of M. Srinivas, an individual investor. Please go ahead.
Good afternoon, sir. Thanks for providing this opportunity. So from the recent news I've been listening to, most of the farmers are shifting to Black Tiger because of this global uncertainty. Did you see any outage in the supply going forward?
No, both. I mean, there are, of course, farmers who are switching to Black Tiger in some areas, but Vaname is still there. Apart from those disease issues, it's good that there are an alternative species as such, Black Tiger also. So we did not see a major issue with regard to Vaname production dropping down significantly, because parallelly Vaname, this is especially in the state of Andhra Pradesh, quite a number of farmers, we shouldn't say a lot, there are farmers in certain areas who have been switching over to Black Tiger. But parallelly, there has been Vaname growth in other states.
Okay.
Yeah, that has also been happening parallelly. And now Vaname or shrimp farming is not restricted to the coastal states any longer. This has gone more inland also. Aquaculture is being done more in inland also. Some of the northwestern states also have been increasing, especially into Haryana and Rajasthan. But again, in Orissa, Bengal and Gujarat also, the Vaname has been there. It has also been increasing. So overall, definitely Black Tiger has increased in the state of Andhra Pradesh compared to earlier years, because of certainty increasing for certain farmers or based on their strategy. But however, vanillin hasn't seen a significant drop with regard to the supply as such. It is because, as I stated, in other states also, vanillin has been growing overall. So that way, Black Tiger crop or supply did not really reduce the vanillin supply, if that is what you are trying to find out.
Okay. My second question is regarding this anti-dumping duty. I think U.S. government is reviewing the anti-dumping duty and they're coming up with a retrospective effect. So did you see any such big hit in the P&L in Q4?
Sorry?
23-24, I think some review has been conducted by U.S. Department, FDA, and they're placing anti-dumping duty with retrospective effect. I think there is an increase in the pricing. Like earlier it is 1.35%. Now they have been revised to like 3.86 or like 3.6%.
Right. Okay, yes.
Impact in the upcoming quarter?
We should be seeing, we will be knowing about that more, yes, in the Q4 once, because they have made that effective, I think, this week onwards. They announced it middle of last week. They made it effective this week. So that will be there for a prospective payments, yes, means there will be a marginal increase on the anti-dumping duty from, not marginal, sorry, from 1.35 to 3.5, like you rightly stated. That will be there. That will be effective from this, mostly in this week onwards, yes. So going forward, it will be effective. That's what you were asking?
Yeah. My last question is on the debt side, sir. I think when I was observing the balance sheet, there is a significant decrease in the short-term borrowing.
Yeah.
From almost like 140 crores to 40 crores. But there is no impact on the receivable days or turnover days. Like what made such a significant downsizing of the debt?
No, sorry. There is receivables, of course, have also been prompt, but at the same time, our receivables mainly from government departments, including GST input, all those credits, those also have been typically receivables which are there. Our debtors are only pertaining to our receivables, right? Whereas receivables from the government are also there. So obviously, they have been more prompt in this year, especially over the past 2 to 3 quarters. We have been pursuing them and we have been receiving them much earlier. That is how it is. But at the same time, we have also increased certain customers who also pay in much earlier period. So based on the terms which we are negotiating with them, though that is the new set of business which has been brought in this year in FY26. So that both together from the government side as well as certain new customers also are prompting for improvement. And along with it, utilization of inventories also makes it possible for us to, that is obviously liquidation of stocks enhances, the capital in hand. So definitely that is another key point which is there. So within these 3 parameters, we have been reducing our overall debt for short-term borrowing from the banks. Yeah. Okay.
Okay. Thank you.
Thank you. The next question comes from the line of Harsha with Seven Rivers Holding. Please go ahead.
Hi, sir. Thanks for the follow-up. Just wanted to on bookkeeping side, what was the export incentive for 9 months?
3 for 9 and 10.
37.62 crores.
37 crores.
37 crores.
Yeah.
Okay. Got it. Sure. Thanks.
Thank you. The next question comes from the line of Anthony Joy, an individual investor. Please go ahead.
Can you hear me?
Yes, please.
Anthony, can you please use your handset, please?
Hello, sir. Can you hear me right now?
Yes, please.
Okay, sir. In the last call, you were saying that the inventory level in US has come down. Is the inventory level in the US is still low at this moment?
No, sorry. See, in the inventory level in the US at that time was lower because of all these factors where certain imports also got delayed, shipments got delayed because of these tariffs, confusion and all that. That was but in the case of Q3, we also need to factor in the holiday sales also play a major role, and how the sales happen in that market post tariff regime is a very important part. We need to see whether the consumption is at the same rate at that high pricing, at the retail level or at the restaurant level. That also will have an impact. We need to see how that would be. But as of now, we don't see any shortage of inventories on the US side. But of course, wherever the requirements overall from India have been increasing slowly. Inquiries have been picking up, like we stated to another participant earlier, post tariff reduction. But as with regard to the inventories, it is more dependent on how the holiday sales have happened, especially during Christmas and New Year. And this month we should see how it will be. This is the Lent season, typically where a lot of consumers move towards white meat and avoid red meat altogether. It's especially in the US and Europe. So we need to see how that would be affecting the overall inventories. So we are not having a clear picture of that at this point, to answer your question.
Right, sir. Another question is, how about the freight charges? Have they come down after the tariff?
No, there was no change. See, the freight charges have been lower this whole year. There have been no increases in freight rates. In fact, they have been coming down in phases, but they are pretty much among the lowest levels. I mean, pretty much at the lowest levels when we compare it to COVID time or during the pandemic time. This is very, very low, and they are very at a reasonable level, to be precise, as far as the freight rates are concerned.
Right, sir. Thank you. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Chaudhary for closing comments.
Thank you, one and all, for making it to our investor call for Q3 FY26 results. And you may always reach out to us for any queries or clarifications on ir@apexfrozenfoods.com. That is the email address, ir@apexfrozenfoods.com. Thank you, and we thank the Stellar team also for supporting us on this. Thank you. Have a nice day.
Thank you. On behalf of Apex Frozen Foods Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.